Jerome Powell did not smile. He didn't frown. He simply stood behind the heavy oak podium in the Eccles building, looking like the embodiment of the institutional stability he was sworn to protect. But the words he was about to speak would destabilize the concept of money itself for 330 million Americans. For decades, the Federal Reserve had operated in the shadows of complexity, speaking in a language of basis points and quantitative easing that the average citizen ignored. But today was different. Today, Powell wasn't talking to the banks. He was talking to you. To ensure the continued dominance of the U.S. dollar in a digitized global economy, Powell began, his voice echoing in the silent press room, we are initiating the transition to the Sovereign Digital Asset Protocol. Effective immediately, the rollout of FedNow 2.0 begins. This is not just an upgrade, it is the evolution of currency. He paused, and in that silence, the nuance was deafening. He didn't say replacement of cash, but the markets heard it. The tech giants heard it. And in a glass-walled office in San Francisco, Brian Armstrong, the CEO of Coinbase, stopped typing. He looked at the live stream, then at his CTO. "They're doing it," Armstrong whispered, realizing the battle lines had just been drawn. "They are closing the gates." This wasn't just an announcement. It was the first shot in a war between two distinct visions of the future. On one side, the centralized leviathan of the state, seeking total visibility and control over every cent that moves through the economy. On the other, the decentralized rebels of the crypto lobby and the libertarian right, who saw this not as an evolution, but as the ultimate trap. Welcome to the end of the dollar as you know it. This is the story of how your wallet became a tracking device. To understand why Jerome Powell and the Federal Reserve made this move, we have to peel back the layers of history. We have to go back to 1971, when Richard Nixon severed the U.S. dollar's tie to gold. That day, money changed from a store of value, taxes of the government. But promises are hard to track. Cash is anonymous. Cash is private. If you buy a coffee with a $20 bill, no server in Washington knows you were there. If you pay a gardener in cash, the IRS can't tax it easily. For the architects of the modern state, cash is a bug in the system. It is a blind spot. Enter FedNow 2.0. In the briefing rooms of Washington, they don't call it a trap. They call it modernization. The narrative crafted by the Treasury is seductive. No more waiting 3 days for a check to clear. No more predatory fees from check cashing services. Instant, frictionless transfer of value, backed by the full faith of the United States. However, the architects, the technocrats designing this system, faced a problem: the rise of Bitcoin and stablecoins. These digital assets offered speed without the government. They offered a parallel financial system. If the dollar remained an analog relic in a digital world, it would lose its throne. China had already launched the digital yuan, monitoring its citizens' spending habits in real time. If the U.S. didn't catch up, the dollar's hegemony would collapse. So Powell's hand was forced. He wasn't just fighting inflation. He was fighting for the relevance of the Federal Reserve in the 21st century. But in doing so, he had to build a machine that could see everything. Imagine this scenario. It's 2027. You walk into a grocery store. You scan your phone to pay. But instead of a beep, you get a buzz. A notification pops up. Purchase denied. Carbon allowance limit exceeded for this month. Or perhaps, funds frozen pending tax audit. This is the nightmare scenario that the opposition began to scream about within minutes of Powell's speech. This brings us to the resistance. Florida was the first to mobilize. The governor took the stage, flanked by flags, his tone combatant. "They want to turn the U.S. dollar into a surveillance coin," he shouted to a roaring crowd. "They want to know if you bought a gun, if you donated to the wrong political party, or if you bought too much red meat. We will not allow the Federal Reserve to weaponize our economy against the people." Simultaneously, Brian Armstrong and the leaders of Silicon Valley's crypto sector launched a counteroffensive. They didn't use press conferences. They used code and social media. "The upgrade to FedNow 2.0 is a Trojan horse," Armstrong wrote in a manifesto that was shared millions of times. "It introduces the concept of programmable money. Once money is programmable, it is no longer your property. It is a permission slip from the government that can be revoked." The term programmable money became the buzzword of the panic. The crypto lobby explained it simply. Currently, if you have $100, you can spend it on anything legal. With a central bank digital currency, CBDC, the issuer, the Fed, could theoretically write rules into the code of the money itself. They could create expiring money to force you to spend during a recession. They could block payments to unapproved vendors. The crypto lobby's solution? Exit the system. The call to action was subtle but effective. Buy Bitcoin, buy gold, buy stablecoins hosted on decentralized networks. They framed crypto not as an investment, but as an escape pod. And the American public, already weary from inflation and distrustful of institutions, started to listen. It didn't happen with people banging on the doors of physical banks like in 1929. It happened on smartphones. It happened in the silence of fiber optic cables. Following the announcement, a wave of capital flight began. It didn't happen with people banging on the doors of physical banks like in 1929. It happened on smartphones. It happened in the silence of fiber optic cables. Following the announcement, a wave of capital flight began. Billions of dollars moved from traditional savings accounts into decentralized wallets. The commercial bank sector, giants like J.P. Morgan and Bank of America, found themselves in a crossfire. They were the intermediaries being cut out. If everyone has an account directly with the Fed via the digital dollar, why do we need Wells Fargo? Billions of dollars moved from traditional savings accounts into decentralized wallets. The commercial bank sector, giants like J.P. Morgan and Bank of America, found themselves in a crossfire. They were the intermediaries being cut out. If everyone has an account directly with the Fed via the digital dollar, why do we need Wells Fargo? Wall Street panicked. Jamie Dimon and the old guard of finance frantically lobbied the White House. "You are creating a bank run," they warned the president. "If the people believe their deposits are being surveyed, they will pull their money out of the system entirely." The irony was palpable. The bankers, usually the villains in the public eye, were suddenly aligned with the crypto-anarchists against the Federal Reserve's overreach. It was an unholy alliance born of survival. The tension escalated when the FedNow 2.0 beta app crashed due to a cyber attack claimed by a decentralized hacktivist group. The message on the screen was simple. 1984 is not an instruction manual. We must pause the domestic chaos to look at the horizon. Why was the U.S. government willing to risk this much domestic turmoil? The answer lies outside American borders. The de-dollarization movement, led by BRICS nations, was accelerating. They were building a payment system immune to U.S. sanctions. If the U.S. dollar remained purely analog, moving through slow SWIFT channels, it would be bypassed. The Fed needed the speed of crypto, but the control of the state. Powell's gamble was this: sacrifice privacy to save the empire. By digitizing the dollar, the U.S. could enforce sanctions with surgical precision. They could turn off the money of a rogue nation or a rogue citizen with a single keystroke. It was the ultimate weapon of 21st century warfare. But bringing that weapon home to use on Main Street was the miscalculation. Scene 06. The Clash. A fictional but realistic confrontation in a Senate hearing. The climax of this initial phase took place in the Senate Banking Committee. The room was packed. On one side, Jerome Powell, looking tired, surrounded by aides. On the other, a coalition of senators backed by the crypto lobby. "Mr. Chairman," a senator asked, pointing a finger, "can you guarantee, under oath, that this new digital currency will never contain code that restricts what an American citizen can buy?" The room went silent. The cameras zoomed in on Powell's face. Powell leaned into the microphone. "Senator, we need to maintain the tools necessary to manage monetary policy and prevent illicit finance. Absolute anonymity is no longer compatible with national security." There it was, the admission. Absolute anonymity is no longer compatible with national security. That clip went viral instantly. It was the fuel the crypto lobby needed. Brian Armstrong retweeted it with a single word: control. Within hours, "Cash is king" and "Bitcoin is freedom" were trending. Small businesses started putting up signs: "We accept cash and crypto. No FedNow." A parallel economy was beginning to form, a black market of privacy-conscious trade. Let's go back to the street level. Think about your own life. Think about the transactions you make that you don't want the world to analyze. Not illegal things, personal things. A therapy session, a donation to a controversial cause, a gift for a secret lover, or simply a burger when you are on a diet. Under the new system proposed by the Fed, the data from these transactions wouldn't just be with your bank, it would be centralized. The psychological weight of being watched changes behavior. It creates a society of self-censorship. We spoke to Sarah, a small business owner in Ohio. She deals in antiques. "I don't use the new system," she says, looking over her shoulder. "I deal in barter, gold, and stable coins now. My grandfather told me stories about the government seizing gold in the 1930s. This feels the same. They aren't taking the money. They are taking the freedom to use it." Sarah represents millions, a quiet, stubborn resistance forming in the cracks of the digital panopticon. As we close this chapter, the FedNow 2.0 rollout is stalling. The pushback has been stronger than Washington anticipated. But the government rarely retreats, it only regroups. There are rumors that the Treasury is preparing a new bill, one that wouldn't just introduce the digital dollar, but would effectively outlaw its competitors. A bill to ban unhosted crypto wallets. A bill to tax cash withdrawals at punitive rates. The ultimate showdown hasn't happened yet. The infrastructure is being laid. The servers are humming in data centers across Virginia. The code is written. The question is no longer, will we go digital? The question is, who holds the keys? Will we live in a world where money is a tool of freedom, peer-to-peer, uncensorable? Or will we live in a world where money is a leash, held by a central authority that can tighten it whenever you step out of line? Jerome Powell has made his move. The crypto lobby has built its barricades, and you, the user, are caught in the middle. Look at the cash in your pocket. Take a good look, because in 5 years, that piece of paper might belong in a museum. This is not just about economics. This is about liberty. And the clock is ticking.